Good evening, everyone. This is Wayne, and this is the video version of the trade report for Thursday, June 7th, 2018. Well, I think the theme for today was the pause that refreshes. In every accumulation cycle, we need a distribution day, and today was that day. Stay tuned to find out more. Greetings, everyone, and thank you very much for spending part of your day with me as I go over the action and activity from the financial markets in today's trade. Well, this is a daily chart of the S&P cash market, ticker symbol SPX, and we did have a little bit of a pullback today. It was much more of a pullback before the market actually closed, but it bounced right back up again, still closed lower, but not as low as it went. Now you can see how the magic of the Fibonacci's once again comes into play. The 1272 here, the level that price just ripped through yesterday, was tested today, and we bounced back up. That's very bullish. So again, we're in an accumulation cycle. That means we will have distribution days, profit-taking days, minimally down days. There has to be for every exhale or inhale, there needs to be an exhale. So the markets inhale and they exhale. Tomorrow, I think we're going to inhale again. I think tomorrow we're going to find 2,800. Yeah, I'm going to predict that. Just for you guys to all have something to kind of keep your mind on. And just see if Wayne's got his stuff together. Anyway, it doesn't matter if I'm wrong or right. It's just kind of a fun little projection for a Friday. I really feel as if this market has the capacity to find 2,800 and do so in a single session, that being tomorrow. There's so much energy in this market that wants to go higher now. Ever since we broke through the 618, there's just been this edict, this mandate to go higher. And even today, with the move down, the distribution day, if you will, we got bought back up into the close. So there's a lot of bullishness in this market. Now, before we look at this as being the only market and judging the energy of the market off this one market, we do need to look at the NASDAQ, the Russell, and the Dow. So let's take a look at the Dow. Now the Dow actually closed in the green today, but it did come down off its highs. Amazing day for the Dow, actually, in light of the fact that we had some rather significant selling in the small caps and technology. So if we look at the Russell futures, actually, let's just look at the Russell, not the Russell futures. That's the Russell futures. Let's look at the Russell. That closed down 8 points plus. You can see that it bounced back up off its low and actually had a relatively decent day in the great scheme of things, given how low it actually went. So we had a down day in the Russell, but for all intents and purposes, it's maintaining an upward trajectory, and there's kind of a sideways dynamic associated with what the Russell did today as far as its overall trading. Let's see. And the last market is going to be the NASDAQ. NASDAQ had a bit of a rough day, but came back up off of its lows rather nicely, just like the Russell. Now, this presents a very different set of circumstances. This chart pattern right here, this candlestick pattern, is actually a bearish engulfing. A bearish engulfing, we've talked about before, requires confirmation, but it's the first step of a bearish potential movement. We'll see if that plays out. We do need to see how the market trades tomorrow. It's the last day of the week. There really is nothing in terms of economic data coming out tomorrow. I do believe that there's some momentum still remaining to the upside in this market, and I think technology still has a very clear memory of bullishness. So To say that, the market's going to keep going down may be a little more pessimistic than it really needs to be or should be. However, we do have this Ichimoku cloud configuration, which is a little ominous, to be quite honest with you. This is a pool, and a pool is an area of attraction for price, and you can see how it's begun to move down toward that. Now we have a couple of lines of support. One is the Tenkan line, and the other one is the Kijun line, and those are both moving averages associated with the Ichimoku cloud indicator. So we'll see what happens. I mean, the overnight session is going to be interesting, and we don't really draw upon the overnight session for the purposes of providing an indication of what the regular session is going to look like, but it still is an aspect and component of the overall energy of the market. So when we get up tomorrow morning and take a look at how the market's traded overnight, it will be interesting to see. So those are the indexes. Now we have a few stocks that I do want to show you. Kind of the usual suspects. One is Amazon. Amazon had another down day today, but boy, has it really been on a tear. I mentioned that it, going up like this, it kind of needed a little bit of a pullback, and it wouldn't be necessarily a bad thing to see it move down to this 1272 down here at 1654.97. Well, the low of the day was 1676.11, so it was about 17 points away from that level. Sorry, not 17 points, 22 points away from that level. Will it go lower tomorrow? Well, this is where it gets kind of interesting, because when we talk about the Ichimoku cloud, we've got a very bullish cloud. I mean, it doesn't look like the cloud would support a down move. That doesn't mean the market won't move lower. It just means there's more of an updraft here. There's not an attraction lower for Amazon. So we'll see what happens. These are all just dynamics that, I'm looking at. It's how I develop my trade theses and how I look at the markets as a whole in aggregate based on the individual issues that I'm looking at that I believe are the most pertinent and the most powerful energetically contributing to the overall movement of the market. Amazon obviously is one of those. Now, Apple had a relatively good day today. It closed lower, down 52 cents, and it did end up with a bullish engulfing as well, but it's not a textbook bullish engulfing. It didn't really encompass the wick of the candle, only the body. And we still have a cloud here that could very well be continuing to beckon to Apple, but Apple is just amazingly strong. Plus, it's got a buy signal here. And it did not participate to the downside as much as other issues. So let's talk about those other issues. Probably the most important of which was Google. Google's had 3 down days in a row now, and it has the biggest Ichimoku cloud that looks like it really is looking for price to kind of take a dip in the pool. That would be a huge move to the downside, but Google had a huge move to the upside. 4 days of up action and $85 worth of price movement. A move down to the low end of this candle here, which would put it at about 11.12, and it's currently at 11.34, so another $23 lower, that would be fine. And then it could move up from there and find the 1171.13 level, which is the 1272, which is where resistance was found way back in March. In fact, the middle of March. In fact, my wife's birthday, 3/13. So what'll happen tomorrow is still a mystery. I'm just showing you what happened today, the emphasis of the energy in today's market, and the associated technical indicator that I look at, which of course is the Ichimoku cloud. I also pay very close attention to the Fibonacci lines, and we're working with the emphasis of an accumulation cycle, but on a distribution day. So will we get another distribution day? That would not be out of the realm of what would be considered probabilistic. We don't get 3 up days and 1 down day necessarily as kind of a textbook view of how the markets move. That's kind of in keeping with what would be considered ideal, 3 days up, 1 day down. But sometimes we'll get 2 days up, 2 days down. Sometimes we'll get 3 days up, 3 days down. Sometimes we'll get 2 days up, 3 days down. Still an accumulation cycle. It all depends on where the lows are put in and where the highs are put in, and how big the moves are on the days that go higher versus the days that go lower. So we've had three down days that have taken us from there to there. These 3 up days took us from here to here. So you can see there's about a 35% move to the downside versus the overall move to the upside. That is a classic distribution cycle, and that's a 3 and 3. So that's the energy of how you view an accumulation cycle. Now, if we had, let's see, so this distribution and this accumulation, this was a distribution cycle here. More distribution, more accumulation, a lot of distribution, then more accumulation, and so you can see where this is a distribution cycle. We have longer distribution lines than we do accumulation lines. Well, now that has changed. So as we continue looking at the market, we're going to take a peek at Microsoft here, which had a huge down day. Now, coming back down to the 100 level, which I mentioned yesterday in the trade report, would be perfection. I mean, coming back down to test that 1272, that would be beautiful. That would be ideal. That would be textbook. So I like that idea, and I will tell you right now, if it gets back down to 100, I'm a buyer. And you can see this Ichimoku is just screaming for higher prices. So today I was tempted, but we need to give it one more day. And we'll need to look at Netflix. So Netflix, a down day, it found the Tenkan line and bounced up. Netflix is pretty darn strong, and I like Netflix. I almost bought some Netflix today. Couldn't quite pull the trigger. I think it might go a little bit lower tomorrow, but again, very important look at the this real tight little area right here, which comes into play basically tomorrow. We'll see if Netflix goes lower. This is what precluded me from buying Netflix today, this little dip here. Nice bounce off the Tenkan line, though. You can see it bounced back up again. So looking at Netflix very closely. And NVIDIA. NVIDIA really had a nice bounce up off the lows. This is actually quite bullish. And this move lower and then bounce back up again in light of the pool here is extraordinarily bullish. I think NVIDIA goes higher tomorrow. If it does, I'm a buyer. I'm a buyer of NVIDIA tomorrow if it goes higher. This is a bearish harami, which isn't as powerful as a bearish engulfing, and it does require confirmation. But given the fact that it bounced up so high off its low, that's telling me this market's going higher. So that's what I'm looking at there. Real quick, Tesla. Tesla had a really strange trading day today. It opened, went higher, and then just totally collapsed, went quite a bit lower, and then basically closed where it opened. I honestly do not know what to make of this pattern right here. If I were to just hazard a guess, I would say it's bearish, because the buyers, basically went away. I mean, this is a very, very, very large amount of selling that, it went up and then came right back down again. But it did close off its lows. Now, that may be all associated with the pool here. So what Tesla does tomorrow, well, is anyone's guess any day, but I'm interested in seeing how this pattern plays out. This is whoops, let me get the proper tool here. This really has me kind of fascinated how this is going to play out. It's kind of a harami. It's kind of a dark cloud pattern. But with this huge green candle, it's hard to make a real bearish case for this. So anyway, just gonna be watching it. And then Twitter had a down day, finally. Some really incredible action in Twitter since this area down here. Low of the day, 28.43 back on April 30th. And it's been basically uphill all the way. Closed or found $40 plus in today's session and then fell and then went higher into the close. So we got a nice hammer there. I think a lot of this downside action is due predominantly to this cloud configuration that seems to be showing up on a lot of technology stocks. Not all of them, of course. It's not on Amazon. It's not on Netflix. Was it on, can't remember if it was on NVIDIA or not. Let's take a look at NVIDIA again. Yeah, it was on NVIDIA. Okay. So that's kind of the dominant players in today's market. There is one more stock I just want you to take a look at real quick here. This is McDonald's of all things. I guess they added new ordering terminals in their stores. I'm not quite sure. But on that news, the stock jumped $7 today. I totally missed it. I didn't hear the news. And I look at McDonald's throughout the day, but by the time I found this on my radar screen, it had already jumped up about $5, and I thought to myself, okay, this can't go up much higher than that. And the next time I looked, it was up $7. Sometimes you miss trades, and this one was a miss. So, it is what it is. So the markets, of course, as I look at them during the day, I'm always watching the futures market, and we kind of had some nice action in the pre-market, went higher when the market opened, dropped pretty good, and it looked like it was going to be another buy on the dip V bottom, and sure enough, we went higher, and I thought, okay, that's great. We're probably going to head up to 27.85 or so. That wasn't going to happen. We fell, tried to go higher again, and then just really collapsed. I'm not sure what precipitated this. There was definitely some algorithms associated with this, some sell programs, and then the V pattern happened. So after all this crazy noise here, that kind of came in and kind of shook things up, kind of thrashed around a little bit, and then we got some pretty decent selling that took place, and volatility actually bounced up pretty high. Finally, we got a little relaxation and buying into the close when cooler heads prevailed, and now we're getting a little bit of buying in the extended session. And we're in the quiet time now, so there really isn't anything happening at the moment. And of course, the very last chart that I would like to show you is the VIX. And we'll just kind of run that over there right now. Now, what I did today is I bought some VIX puts. And you're saying to yourself, what? Okay, so what does that mean? Well, VIX puts mean I'm looking for the VIX to go lower. And I bought them when the VIX was up about right here. And now it's down to about right here. So I'm already in profit on the trade. And of course, we have this very interesting bit of action here. I think we're going to head down to about a 10 print, folks. I think we've got this kind of action coming. And I think it's going to happen tomorrow. Now, there's a lot of mixed signals right now in the market. And they're coming from one place in particular. But I think predominantly it's priced in. and that's the June 12th meeting between Trump and Kim Jong-un. There's a lot of anxiety around that. There's a lot of uncertainty. Nobody's sure if the meeting's actually going to take place. And I think there's a flow of information and energy associated with that is being digested, integrated, and encompassed by the current movement of this market. I think the optimism associated with the prospect of this is so tremendous that the market's catching a bid. I think that the potential for this meeting to be canceled or go badly, or whatever you want to call it, is creating more energy on these distribution days. So, that's going to happen on the 12th. Today's the 7th. So we've got next Tuesday as the meeting day. We'll see what happens. And it bears mentioning, there's one more market that I want to show you, and that is crude oil. Crude oil had an amazing move today. Very nice move off of this low, and it did not touch the 100% symmetry support here, which was quite bullish. Now, that being said, in aggregate, it's still not a very happy market, but it was a very nice intraday move. Intraday move today. If oil can get above this lower this lower line of the upward channel, and also get above this 100% symmetry resistance line, and by extension get above the cloud, I'm a buyer of oil. And until then, I think we're gonna kind of bounce around. I think we're gonna kind of do this thing. I think we're gonna keep on just kind of choppity. Now, June 22nd is the OPEC meeting. That is 15 days from today. 2 weeks from tomorrow. The oil market is going to be on edge to some degree until then, and we have 4 more inventory reports before then. So the market will definitely be volatile, and it's really difficult to look at a market that's trying to decipher what's going on with the OPEC ministers, because honestly, sometimes I don't even think they know what's going on. And I don't mean that disparagingly. I just mean sometimes you get information over here that doesn't jive with information over here, and everything gets confused. And that is the way of the world as it relates to crude oil. You get a lot of Middle Eastern countries that have their designated minister, and they talk about agreements and ways of approaching the output of crude oil, and sometimes it doesn't make sense. Sometimes there's agreement, sometimes there isn't agreement, and kind of the elephant in the room is the fact that the Aramco ETF that the Saudis are going to be issuing this fall is still a huge component of why Saudi wants crude oil to go higher, why the Saudis want crude oil to go higher. So I think ultimately we do get higher prices in oil, but I don't know if we're going to go lower first. So I'm not in a hurry, let's put it that way. I don't need to be in crude oil for any reason. So I want to wait until this known binary event is concluded, and then we can kind of see where oil is moving and grooving, and how it's reacting to the OPEC meeting results, and we'll be in a better position to make our trading plans after that. So that about covers it. And again, what I did is I bought the 12 strike price puts in the July monthly contract of the VIX, ticker symbol VIX. And that is a trade that I think will become profitable very quickly. And an update, I exited my VXX yesterday, and I made a total of $125 on that trade. I was in it way too long for that much profit. And I think I got a little bit overzealous in my attempts to hedge that trade, and I really missed out on a lot of profit in that trade as a result of being too over anxious to hedge. So when I'm speaking to a group of members in my membership group, I will be describing and discussing that trade and the dynamics of it and my entry thesis and when and where I hedged it and why. And those are the types of things that I like to present. It helps me kind of process my side of the equation, but it also reveals a lot and helps me to be, quote unquote, kind of honest about my trading. And it helps to hear how trades are established and how they're conducted and ultimately how they're exited. And in this case, how the mistakes that were made, affect the outcome. So, and it happens, not every trade is perfect. In fact, very few trades are perfect. We do the best we can with what we have to work with. We make decisions based on market action and our own ability to discern what is happening and our own trade thesis, our own trader psyche, and how we ultimately decide the probabilities of a given trade are going to play out. And in no way, shape, or form is it possible for anyone to predict what's going to happen next in the market, but we have to have an idea. We have to have an opinion. And ultimately, we need a high probability thesis for every trade entry. And I've said this a million times, and I can't say it enough, and we hedge our portfolios. That is the most important aspect of trading, is hedging. All right, folks. Trade safe. Trade what you see if you choose to trade at all. Good night and good trading.